He's passed out from SMS from batch 2004. He has come here to give us knowledge about, share the knowledge about investment banking, and I hope we have great time with him. It's 1 hour, much more to learn from him.
Good afternoon to all of you. Just want to do a small checkup for how many people, about 100 people over here. How many of you are interested in finance? And how many of you are interested in marketing? Okay, what I'll do is, this is a very impromptu thing, so I've just got some PPT over here, but I'll just junk it there. I'll just share a few things about it, but more I'll like it to be a more interactive session, so you all can please ask questions whenever you all want. I'll just tell you something. The purpose I am here today is probably to just, when I was in FMS, I never knew what is investment banking. I just heard about investment banking. It's something which everyone does, it's something which everyone wants to go to. But I didn't know exactly group. I'm sure all of you all know what it is. Investment banking forms a subsidiary of ICICI Bank. Okay. Now, investment bank has three main divisions. One, and the most important division, is called the corporate finance division, which does the M&A and IPO. The second division is called the equity research and equity sales division, and third division is called the debt market division. So I'll first take you all through the corporate finance division. I personally work in the corporate finance division, which is more into M&A and IPO. So if you just look on the left hand side, the key transactions done by a corporate finance division of an investment bank, which is first and foremost is M&A advisory, which includes mergers, acquisitions, divestitures, privatization, private equity placement, and others. So what do you mean by a corporate finance M&A? M&A means if any company wants to acquire a company abroad or wants to acquire a company in India, they need a disintermediary, someone who can help them to get the right target, help them to acquire the target. Some unit of it which is not doing very well, they feel that, okay, I am into, like a Tata is into so many things. Tomorrow they decide that, okay, I don't want to be into the automobile business. So then they come to us and tell us that, okay, I want to hive off this automobile business, find me a good buyer for this internationally or in India. So then we do the task of doing an analysis, who is the good buyer, whether they have the capacity to pay or not, how do we structure the transaction, how do we put the tax analysis, and then we decide whom to sell. The second part of the work of a corporate finance team would be the capital markets transaction, which would be a public issue, IPOs. I don't know if you all see the huge hoarding outside for a DLF IPO or for any other IPO. IPO basically is initial public offering. This is a primary market listing on the BSE or NSE in India. What happens is the company, after it reaches a certain stage of growth, it needs more capital to grow. Capital can be two ways, it can be debt and it can be equity. Debt is normally financed by banks only once you have a certain portion of equity in your company. So an IPO is to get equity from the public into the company. There are different ways of doing that. One is obviously you list on the exchange, that is one. Second is you can do a rights issue, where you have an existing set of investors who are invested in your company. You give them the right and the option of again investing in your company. The third and fourth are the, which is more prevalent right now, is the international offerings, which is called the GDRs and the FCCBs. I'll just take 2 more minutes and explain on that. GDR is called the, yeah, not bad. Okay. It's something very simple. Luxembourg or a London Stock Exchange or a Singapore Stock Exchange. These three main exchanges provide you an option of depositing your shares over there and then issuing a depository receipt for that, which can be traded over there. What is the advantage of that? Advantage of that is, there are certain investors who are not present in India. People in US, people in London, they probably don't cover India that well. So you have to go to their market to get money out of them. So that is where the GDR comes in. You go to you go to the London Stock Exchange, give your shares, issue depository receipt, which you sell to the investors over there. So one, the depository receipt is listed on the London Stock Exchange. Two, it provides more liquidity, and three, it provides new sets of customers, new sets of investors for the company to raise money. Then we come to the FCCBs. Anyone knows FCCB full form? GDR full form, guys? Frankly, I didn't know all these full forms when I was in SMS, so I must, I don't know, I didn't know any of this. FCCB is a convertible bond offering, a company which raises money today as a debt on its book, which gets converted into equity at a certain call period, which the investor has at his hand. So it might be a debt right now with a certain premium to the current market price and gets converted once a certain period elapses or stock performs to a certain level, or whether investor wants to convert and take it into equity. So the major difference in all this is FCCB is treated as a debt on the books of the company. It is not treated as equity. Only when it converts is treated as equity. Obviously, I can go on talking about how big it is, how good it is, but I'll just skip that. I'll just take you all through. Okay. I'll take you all through just 3-4 of the transactions that we have done till now, and just tell you that what is the nature and the scope of the transactions. The first transaction was where we helped Bennett & Coleman. Bennett & Coleman is obviously all of you know. Yeah. We helped them acquire a company in South, a newspaper company in South. That was one of the transactions. The other transaction was we helped I'm talking about the M&A side right now. We helped a company called Spentex acquire a company in the Asia region, in the Uzbekistan-Kazakhstan region. Third one is MTNL, BSNL restructuring, and fourth one is UTI sale divestment. All the four different kinds of transactions that I have asked. Explain to you. First one is the India M&A, which is we are helping an Indian guy acquire an Indian company based somewhere in a different region. So either you can have an acquisition based on different regions, so this company is not present in South in a big way and it wants to acquire and get an immediate space, or it's not present in that vertical itself, it's present in an English daily, it's not present in a local daily. That would be another way. Or it's present in different format itself. It's present in a newspaper business but not present in a magazine business or not present in an internet advertising business. So the 3-4 different ways where you can approach an M&A transaction on a synergy basis. This was one of the transactions. The second transaction, another way of looking at a cross-border M&A would be that where you want to access the international market. So like over here Kazakhstan and Uzbekistan where this acquisition was done, you have one of the largest textile manufacturers over there, you go and acquire him. He has his own customers in US and Europe, everywhere. It will take you a lot of time to go and acquire those customers and build up the customers. The easy way is you go and acquire a company which is already servicing those customers, you directly start servicing them. And MTNL and BSNL will be a classic case of reorganization of both our government entities. They want to get reorganized into a bigger entity given that private players have become so big in India right now. So this is another case of reorganization in M&A. And last one, UTI is a case of disinvestment. UTI wants to disinvest some of its old investments in various companies where we have helped them to do that. Okay. So now, till now, I'll just give you a small capsule. What I've told you is what is M&A, what is IPOs, what is fundraising, and what does a corporate finance team of an iBanking does. There's one more third critical thing that a corporate finance does is private equity. Private equity is wherein you basically help companies raise money who are not ready to go to public right now. They want some strategic investor or financial investor who has the muscle power to invest in the unlisted stock, take the risk of volatility, take the risk of long time period holding, and invest in the stock. There are 2-3 reasons why you would do a private equity. One is if you get a Goldman Sachs as a private equity or you get a Carlyle as a private equity, they have such other investments internationally in the same sector, a textile sector, manufacturing sector, or automobile sector. So if they have already probably invested in one of your clients, if you are supplying automotive parts to BMW and they have already invested in BMW, if you are the same investor, you can use that linkages to increase your sales. That is one. Second is a private equity guy by definition is someone who is more sophisticated, someone who understands the sector a bit more, who has more holding power in a stock, which means that he is more quality investor. He increase your profile itself, gives you a better valuation when you go for an IPO later on. Second. And third and the most important thing is private equity guys are the ones who have a very strong leverage power. So if they have 100 crores in the portfolio, they can raise from banks another 1,000 crores. So they have a lot of liquidity in them to invest in Indian companies. This is another area where we do a lot of transactions.